Good afternoon and welcome to HYCM's webinar, FX Week Ahead, Live Market Analysis with myself, Giles Coughlin. Thank you for joining me as we look ahead to the major events that we have on the calendar coming up. Just as folks are coming in, just want to make clear that when we talk about different entries or exits or currency pairs or commodities or indices to trade, this is not trading advice. The whole purpose of this workshop and the seminar that we now have on Wednesday, please note that the new time is 12:30 p.m. on Wednesday for the week ahead workshop seminar. And the whole idea of this is education. So the idea is you look over my shoulder, you have a look how I'm making decisions, and then you can use it to inform yourself about how to best make investment decisions for yourself. So just to make that clear, hi guys, if you're coming in, Lolu, Sam and Sean, good to have you on board, guys. Looking forward to taking you ahead and getting us ready for the week. And it's a pretty busy week. There's quite a few different strands going on that we just need to pull together. So the first little strand that we have is if you're a pound trader, this is a speech that pound traders will be looking at. As we know, Britain is now in the process of agreeing a trade deal between itself and the European Union. Remember, the European Union is the UK's largest trade partner, with over 50% of all trade takes place between Britain and the EU. Remember, the EU is well over 22, 23 countries. So Britain is dealing with a lot of those different countries, Germany, France, Holland, etc., etc. And Britain still hasn't arranged a final deal between itself and the EU in terms of trade. So this speech this evening at 6:45 GMT is going to be crucial, because this speech for pound traders is going to be indicating the new footing of the UK government in terms of dealing with the EU. So just wanted to have a little look at this. Now, if you look at the pound chart, what you see is that last week there was a surprise announcement and we saw some pound buying. And the reason for the pound buying was that the Chancellor of the Exchequer, in other words, the Finance Minister for the UK, Sajid Javid, was sacked. He resigned because he wasn't prepared to sack his advisors. And so there's a new financial minister for the UK, a new Chancellor of the Exchequer, and his views were expected to be very expansionary for the UK. So the hopes were that the new Chancellor would give fiscal stimulus, monetary stimulus into the UK economy, so the Bank of England didn't have to cut interest rates. That's where we saw the pound buying. The pound has been selling off from some of those levels because it's a little unclear as to exactly what new policies, whether the new budget is going to take place on the March the 11th. So that's where we see some pounds selling. The market's not necessarily convinced it's going to be a more expansionary stimulus package from the new finance minister. So there's uncertainty there. So the reason that's relevant for us is simply because when you look at tonight, we've got the 6:45 GMT speech. That is going to be quite key potentially for the pound direction. So all pound traders, keep your eyes open for 6:45 for the headlines to see if there's any new perspective, any new angle that the UK are taking with the EU. And the big picture is that it's thought that the UK is too ambitious to try to arrange a trade deal within the year. Okay, the deadline is December 2020, and that's why we've seen the pound is slowly being sold off each time since the election, since Brexit Day. Yes, there was a spike on Brexit Day as the UK formally left the EU. And then we've been seeing these selling off in the pound, and the selling off is due to skepticism about whether the UK can really strike a deal with the EU. So that's going to be key coming up. It's one not to miss So if you're trading the pound, you need to be aware of that. And if you're looking to enter any pound positions this evening, that will be a good event to have a look, and maybe wait until, or maybe take a position out of it. So that's something to be aware of. Looking at the financial markets as we start Monday morning, what we've seen is that the Asian equity market was mixed. We saw some strong Chinese response, the Shanghai, the Hang Seng, and some of the reason for that strength has been the Bank of China has been really wanting to support the Chinese economy due to the coronavirus fears. That has been very supportive for the Asian equity markets. But you notice the Nikkei is down 0.69%. And if you just have a little look at the calendar, you can see that industrial production was revised down. Just go back to that page. You can see industrial production was revised down to 1.2% versus 1.3%. And GDP was a real big miss at minus 1.6%. So obviously Japan has been hit by US-China trade wars, it's been hit by a typhoon, there's also a sales tax hike in Japan. A number of different drains have been on the Japanese economy, and that's starting to show. So just having a look at the chart, you can see that minus 1.6% is a deep fall. Okay, it's the deepest fall since 2014. Now, that's just one to be aware of. That's why we've seen this mixed response. Now, normally, what we would have expected to have seen is some strong Japanese yen buying, but we haven't at the moment. But that's a story that may return, because the market at the moment is really focused on the risk tone from the coronavirus outbreak, and there's some slight relief from the market at the moment that came through the end of last week. Last Friday was the first Friday that we didn't get a negative stock market close, and you can see in the US S&P was up, the Nasdaq was up, Dow fractionally down, but the market felt confident to hold risk into the weekend. Okay, that's kind of a sign that the worst of the coronavirus fears have pulled out of the market. Now, whether that remains to be the case, it still remains to be seen, but that's just roughly what's going on. That's why we've seen the Asian equity markets, you know, the Hang Seng Shanghai strongly boosted, and it was the GDP out of Japan which dragged the Nikkei down. Okay, so that's European equity markets. They're tentatively risk on tones. Okay, so we're seeing a market that's looking tentatively, you know, just cautiously looking like taking risk on. US markets are closed. It's a US holiday today, President's Day. So just to be aware of that, there's not going to be much market action coming from US markets themselves. So just to be aware that they are closed for the day. And if you're listening from the US, have a very nice break. We will now look for the week ahead and the major events that we have coming on. Now, the first thing for us to look at in this is we've covered the Japanese GDP data out over the weekend. We've got a bank holiday, and we've got the David Frost meeting at 6:45 on Monday. There isn't much else. The only other thing to look out for is any announcement from OPEC. Russia have been sort of delaying or postponing any agreement to OPEC production cuts. So if Russia agreed to those cuts, that would be supportive for oil. And OPEC at the moment are talking about not having an emergency meeting and just sticking to their March meeting. So that's why we'll probably see some, downside in oil if there's no sign of OPEC supporting the oil market. But obviously we're balancing that against coronavirus demand. But just to be aware, the tradable sentiment, the news that would be suddenly tradable would be if Russia said that they agree to the OPEC production cuts of 600,000 barrels, and that they agree to that. And if OPEC announced that deal, that would be supportive for oil. So that's the headline to look out for oil. Later on, we have monetary policy minutes. Now, the policy minutes, again, looking for reference to, there's three things that have been weighing on the Australia's economy. One, it has been the bushfires. Two, it's been the droughts. And three, it's been coronavirus fears. So look for any reference to those three items in the minutes, and then the market will interpret what that means for the Australian dollar. So look at that event and see how the market reacts to the minutes immediately after. So the next time you come to your desk, and you've got to balance that up with the risk tone. So if risk is on and the minutes are positive, then that would likely result in some strong Australian dollar buying, and vice versa. If the risk was off, you know, coronavirus fears are getting worse, and the minutes are negative, then we'd see some Australian dollar weakness. So just bear that in mind with the other Australian data out this week. We've got wage data, wage price, and we have employment data. The employment data is very important for the RBA. Okay, the unemployment rate dropped to 0.1% last reading, and that was very supportive for the Australian dollar. So if we get another drop to 5%, 4.9% of the Australian dollar, that would be very, very helpful and very useful for the RBA, and would show some support. The employment change, you have to look at two figures here. You have to look at full-time and part-time employment. The most positive is full-time employment. So if we saw a boost in full-time employment and a drop in unemployment rate, that would be very supportive for the Australian dollar. So Thursday's data point is the most important data point for the Australian dollar, and it's one not to miss. You know, if you are around, that's a great data point to look at. And certainly the next time you come to your desk after this, you want to see what the results were of the employment, unemployment rate. So keep that on your calendar and on your diary. Drop in unemployment is positive, less people are out of work. Increase employment, but careful to look at the full-time and part-time split. Part-time jobs increase is not as good as full-time jobs increase. We also have wage price index, that is important and goes alongside the employment data. But the employment data, so if you've got something, you know, ideally we want two things. So if you've got good wages and we've got good employment and we've got coronavirus fears falling back, then that sort of risk on time, that'll be very positive for the Australian dollar, and there could be some very good opportunities to buy the Australian dollar in the coming week. Okay, so be aware of that, because you've got stimulus going into China, and remember that the Australian dollar is traded as a proxy for the Chinese yuan. So if we have more stimulus from China, coronavirus fears are receding, the wage price is up, and unemployment and employment numbers are good, then we could see a lot of Australian dollar strength. So that's one thing to look out for into this week. Now let's look at the euro. There's a number of very important events for the euro. First of all, we've got German economic sentiment. The euro at the moment, if you just take a look at the euro is in a very clear kind of situation of a strong bearish trend. You can see very strong bearish trend in the euro. And the reason for this strong bearish trend, you can see, look at this. So in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, in the last 10 days, there's been only one bullish update. And, you know, it's crashed through at 1.0900. It makes it like 3-year lows at the end of last week. So when you zoom out, you can see that the last time the euro was kind of this level was April, March 2017. Okay, so we're moving rapidly down to this level here, and beyond that, there's this parity level down at 1. Parity is when, you know, 1 euro, $1, and the euro has been at this level before. Okay, so the outlook is very negative for the euro. We've seen Germany in contraction nearly. Their GDP came out just last week, and they just narrowly avoided contraction, but they had GDP growth of 0.0%. We've had France's manufacturing slowing down, Germany's manufacturing slowing down. There's been a lot of stagnation in the Eurozone. Interest rates are at 0% for the ECB, historically low interest rates. And that's what we keep seeing the euro being sold. So that is still to be expected. There isn't any reason for that to stop happening. So to be aware that euro pressure is very much on the agenda for this coming week. The economic sentiment for Germany will be important. Okay, so if we see a big drop in the economic sentiment, because you got to remember that the Eurozone slowed down the US-China phase 1 trade deal going badly. You know, it took a long time to get a deal sorted, and it dragged on Europe. Now we've got coronavirus fears. So if we start seeing sentiment going down again, then the euro could easily fall a lot further this week. And if you look on Friday, this is going to be the main event for the euro. Okay, all these PMI datas. Now, if we just take a quick look at the PMI data, I just pulled this up for us earlier just to make this point clear. We can see that the PMI, we've got manufacturing, services, and the composite figure. Okay, and we've got the different readings. So we've got German manufacturing, French manufacturing, and then we've got the composite figures. We've got British manufacturing and PMI. Okay, PMI. So this is just looking at the Eurozone. We'll look at the pound side of this in a minute. Now, if in January we saw a bit of an uptick, a bit of recovery in the manufacturing, services, composite. Now, if we see a further recovery, then that is going to give some relief for the Eurozone, okay? But if we see a strong fall, now if you look at the German manufacturing, look, it's expected to be 44.8, so expectations are still low, you know, it's still low. And if we get those expectations being exceeded, then we're going to have more downside for the euro. So, you know, that's one event, very key event for the euro. And I'm expecting the euro to be sold on rallies into this event. So into Friday, I'm expecting sellers on rallies. So anytime you get the euro kind of rallying up back towards this level, I'm expecting sellers. So I'm expecting sellers today, for instance, expecting sellers from this level, from that level, any return up to these levels, I'm expecting euro sellers. It's a very negative and bearish outlook for that pair. So that's just something to be aware of, and that's the main risk for the euro coming up. Let's see. Now we're going to see what else we've got. It's just made sense to do this thematically today. And then it's the pound. It's a very big week for the pound. There's a lot of key data coming out. We got inflation data. This will be important on Wednesday for the pound. Okay. Now, the importance for the inflation data for the pound is the market's asking themselves, when will the Bank of England act? When will they raise interest rates? When will they rather cut interest rates to support the pound? And do they have to? If the CPI reading, you know, falls strongly, or say the CPI, say there's a strong CPI reading, this could force the Bank of England's hand. So the market participants will be thinking, okay, Boris Johnson is trying to negotiate an EU-UK trade deal. Will their fiscal stimulus coming at the March budget be enough so that the Bank of England don't have to adjust interest rates? They won't have to raise interest rates because fiscal stimulus will do enough. Or will the Bank of England cut interest rates to have to help the situation? So if we see a strong fall in inflation, we could see some early pound selling coming in on anticipation of the Bank of England acting. So look at this on Wednesday. A strong reading either way, either positive or negative, is going to see some pound reaction. The most obvious pound reaction would be if we get a negative reading. So say this is 1.3% or below, then we're going to see some strong pound selling, and it'd be selling the pound rallies. That's what I'd be expecting. Okay. Similarly, on the Thursday, retail sales. Now, retail sales had been quite low previously, and this was including the Black Friday sales. So on January's data was a low reading, and usually it'd be a very good reading because Black Friday sales is normally a boost for retail sector in the UK. So 0.7% expected, but if we see a weak reading there, the message it's sending out to the market is that the British consumer is still nervous because of Brexit and isn't wanting to, even though Brexit has happened, it's still nervous about the trade deal that hasn't been organised. So there's a nervousness in the UK. Retail sales give an indication how the UK is feeling, okay, how the consumer is responding. Again, a miss there, and that's more negative for the pound. And on Friday, got manufacturing data, and this is going to be important to the pound because if there's a boost in manufacturing PMI, it's saying, okay, now that Brexit has happened, manufacturing has increased. It's back to business as usual back in the UK. That will be absolutely crucial for the UK economy. So if we see signs of that recovery, that will be supportive for the pound. So there's a number of different releases you have to hold together. There's on Monday, we've got Frost, who's speaking on the trade deal with the EU. That's going to be important for the pound. Then Wednesday, we have inflation data. That's going to be very important. And we have retail sales on Thursday and manufacturing on Friday. So it's a big week for the pound. It's a much quieter week for the US dollar. There isn't a lot of data out for the US dollar. So just to be aware of that, got the FOMC meeting minutes. But apart from that, there isn't really much US data taking place. Got some manufacturing PMI. Now that is worth looking at because obviously, how is the US-China trade deal impacting manufacturing? Are we seeing an uptick in that yet or not? So that will be important for the US dollar on Friday. But until then, it's quite a quiet week rather. Just looking through if there's anything that I've missed for the week. No, that is the major scheduled events to be looking at. So that's the scheduled events to be looking at. Anything unscheduled, of course, will be anything on coronavirus. So the market at the moment is trading a lot on risk on and risk off moves. Okay, so risk on, and we see Australian dollar, New Zealand dollar, CAD strength. Okay, and then we see like oil strength. Okay, risk off, we see Japanese yen, Swiss franc strength, and we also will see equities fall. Okay, so look at the risk mood. How is the market feeling about the coronavirus? If there's suddenly it's spreading, it's getting worse, sadly more people are dying, then we'll go quickly into a risk-off market. And you'll see Australian dollar, New Zealand dollar weakness, Japanese yen, Swiss franc strength. So a good pair to trade in a risk-off market is Australian dollar, Japanese yen short. Okay, when it's risk-on, that's when we see the opposite. We see strength in the commodity currencies and we see weakness in the risk currencies. So if the World Health Organization starts saying we're optimistic about containing this, if China are more optimistic, if the market is thinking, yeah, the coronavirus is bad, but it's not as bad as we feared, so we're going to see a return to strength in copper, oil, Australian dollar, New Zealand dollar, Canadian dollar. So look for that, particularly with there not being much US data out this week. I'm expecting the risk tone to be really setting the tone every day. So each day, have a look, what's the latest on the coronavirus? The general mood at the moment is that the virus is manageable, it's containable. So that is the key event. Now, don't forget that not tomorrow, I have to collect this, on Wednesday, we will be looking at how to put this together. So we'll be looking at some of the most significant outlooks from the key events we've had on that day. So if you're looking at how do you put this to practice, how do you make this into a tradable situation, please do come back on Wednesday and we'll look at it specifically, and I'll give you an example of how to translate this data into actually making trades, how you go about choosing a pair, how you go about choosing your entry, your exits, and we'll be putting the practicalities to it. It's been lovely to take you through to the week. Thank you very much everyone who's joined. Yasser, good to have you. Umar, Shbaz, Sean, Hashik, Ali, Ignatius, great to have you aboard. Salman, I hope you all have a very good week and I look forward to speaking to some of you on Wednesday. Take care now. Goodbye.